sponsored by the Securities and Exchange Commission of Nigeria.
Nigeria's housing market statistics are abysmal, with only about 50,000 active mortgages for a country of over 160 million people. Unfortunately, 85% of PFA funds are in fixed income, with about 65% of that in federal government bonds.
Right now, we don't have anything like mortgage-backed security. We don't have collateralized debt obligations. And what the PFAs are asking is that such products that actually have underlying assets backing them should be available in the market. That debt instruments which they are subscribing to should be fully collateralized, like when you talk of the collateralized mortgage obligations or the other collateralized debt obligations, such that when by investing in, for instance, a mortgage-backed securities, there will be underlying assets behind it. But today, we currently don't have any in the market. And among the activities that we expect to see in the market will be further product development. I think the two of them, the collateralized mortgage obligations and the collateralized debt obligations, will likely be among the earliest products that will come into the market. And for the PFAs have always complained that they are underweight in terms of investment in this instrument because they don't have the available instruments are very few. And the challenge they have is that market operators should create more of those instruments that qualify for investment by the PFAs. But beyond that, we have mortgages that are scattered all over the country. Or we have a number of mortgages that nobody has actually come to bring into a product. Okay, and we do use those mortgages to create an instrument that the PFAs can invest, because that the return on this instrument would be a replica of the return on the underlying assets. That's the beauty of collateralized debt obligations.
The SEC says it's fully aware of the constraints of institutional investors. The apex regulator goes on to reveal its plans to attract institutional funds into priority sectors, and also ways in which its partnership with the IFC will ease some of the fears of pension fund managers.
Today we have about $22 billion of funds available from pension funds. A lot of what they're doing is focusing on federal government bonds and on deposits. But they're concerned about making sure that there's safety, that there's liquidity, and they earn a reasonable return. Some of what provides that and gives them comfort is credit enhancement from the multilateral agencies like IFC, the African Development Bank, or other agencies. We at the SEC have already started work on rules for securitization. We've also worked on capacity for staff of the SEC starting at the beginning of this year. And what our expectation is that before the end of this year, we will issue specific rules on securitization. And it gives up an opportunity for the market to focus on this. We already have REITs, real estate investment trusts, which are already approved. So what it does is just provide a framework that you're able to do securitize other types of assets.
Although financial experts at the conference agree that asset securitization could unlock investments into housing, they're not convinced the Nigerian debt capital market is ready for it.
I think that securitization remains a very viable option for Nigeria and other countries down the road. But from what I heard at this conference, the timing may not be quite right. I think first we have to establish that, lower transaction costs, cleaner title transfers like we just discussed. But in addition, interest rates are at such a level right now that taking out mortgages and buying a home, that may not make complete sense.
There's little doubt about the potential for good investment returns in the housing sector. Financial experts believe that with determination and efforts, the challenges for both the regulator and pension fund managers can be surmounted.
Traditionally, and you can check the track record, Nigeria has been known to defy all odds in getting things done. They may take a while getting there, but once they make that decision, the speed at which things change is phenomenal. So I wouldn't put a particular time limit to how soon it can be done. I think what we should focus on is what is the commitment to getting it done. Like I said, once as a country we're committed to something, we usually get it done very, very quickly.
The IFC's focus on Nigeria will go beyond growing the debt capital market. The international lender gives a broader picture of its activities in the country in the near future.
SMEs is really the ultimate aim because that's the biggest producer of jobs in most countries. And one of the biggest problems we have in Nigeria today is the lack of formal employment. And so we're going to be working very hard to really increase that formal employment. The growing urbanization in Nigeria, which is currently at 50%, the growing consumer class, the middle class, is going to really anchor development of various consumer-oriented sectors, whether it's mortgages, whether it's better products, on the manufacturing and services side. Those are things that we believe are going to change the landscape, and that's what IFC will be focusing to support Nigeria's development on.
The increased capability of the IFC, of the African Union Bank, of all the other financial institutions who can help the private sector and lend them in Naira so they can focus on building their business rather than worrying about foreign exchange volatility. That's really what we want to do.
The key takeaway is we need to create the appropriate environments for all forms of financial intermediation, whether it's the banking sector, whether it's the debt capital markets, whether it's the equity capital markets. And by creating the right ecosystem, we're also able to create the right products to attract investors to the most productive projects, whether it's in infrastructure or housing. And I think that's really the most important takeaway. And with the commitment of all stakeholders, we can achieve it.
For Nigeria's capital market regulator, benefits from its partnership with the IFC are already yielding positive results and is excited about what the future holds for the market.
What's great about this particular conference that we've put together with the IFC is a number of things. The first one is that there are resource persons from all over the world, from Asia, from other parts of Africa, and from Latin America, and some of the IFC teams that have worked around the world. And some of the ideas for us are novel and ones that we can take forward. One of the things that I liked very much is the idea which you see in Brazil or in Mexico, where small and medium scale enterprise loans are actually securitized. So given President Goodluck Ebele Jonathan's interest and all of us in creating jobs, given our understanding of the value that small and medium scale enterprises bring to job creation, for me, it's great that we can expand the opportunities for the capital markets to support small and medium scale enterprises.
The IFC has been very active in African debt capital markets, with the equivalent of over $650 million committed in 17 local African currencies over the past 5 years. The AAA-rated issuer believes Nigeria will play a key role in the global economy in the future and is working with stakeholders including the Nigerian Stock Exchange, the Central Bank of Nigeria, the SEC and other market operators to help develop Nigeria's debt capital market. The benefits are expected to span across the broader economy as the market will be deep enough to fund major infrastructure projects for the government. Esther Ugbodaga, CNBC Africa.